Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. Here's your daily technical analysis of Brent crude oil and spot gold. I'll start with ICE Brent crude oil futures. An interesting piece of action yesterday, or should I say over the last two sessions. You see, yesterday was day 2 in a 2-day bearish meeting lines pattern. Now, bearish meeting lines patterns are interesting. They are seen traditionally as, the name suggests, bearish, but the data indicates that just over half the time they have a bullish follow-on. Thus, it'll be interesting to see if the market follows tradition or the data. Anyway, prices gapped open higher since filled in, and also filled in the changeover gap from last week. Then market then failed to exploit this high open and instead dropped back down into the important heavy-duty congestion between 115.70 to 120 even, closing back below the May 2012 high at 120 even. Overall, the market continues to move away from 2 descending triangle patterns formed since March. Potential targets on the upside for these recent previously mentioned descending triangles, as well as the double stroke triple bottoms formed over the same period, are as follows. For the larger March-April descending triangle, I have a potential primary target X1 in the 132 at 10 area, with a harder to get secondary target X2 in the 147.30 area. For the smaller March to April descending triangle, I had a primary target X3 in the 120.5 area, with a harder to get secondary target X1 in the 129.20 area. For the double stroke triple bottom pattern, I have a potential target X5 in the 126.5 area. Okay, I hope you've got all that. So far, we've achieved the primary target X3 in the 120.5 area for the smaller March to April descending triangle. And so far today, a higher open, just under the May 2012 high, followed by a brief move higher, but prices have then moved back within the heavy-duty congestion between 115.70 and 120 even, sitting just over the 2017 high at 119.19. Spot gold. A bearish closing black Mariposa yesterday, as well as a second bearish black crow. It was not the best example of a bearish closing black Mariposa. I would describe it as functional rather than aesthetically pleasing. It nevertheless was a close back below the long moving average, currently 1842. Until yesterday, seeing the market had been captured between the slowly rising long moving average below and the overhead 50% Fibonacci line of March 21 to March 22 move at 1873. I described the action as very much like watching someone treading water. A lot going on, but going nowhere. This was the first hint of a potential move outside the capture zone, yesterday's action, and that was since early last week. I would pay special care to last week's action as the dip below the long moving average was swiftly countered the following day, and one should watch out for just such a possibility. I still have drawn nearby the broken upper tine, currently at 1791, of the early March to late April bearish Andrews pitchfork. I really would like to tidy up this daily chart and retire this pitchfork, but as long as we are maintaining these unmoving actions, then I will feel obliged to keep it on here. So far today, well, a slightly lower open and a small dip, but this was swiftly countered with a move upwards and back over the long moving average and back within the same zone, the long moving average below and the 50% Fibonacci line, the March 21 to March 22 move overhead at 1873. Thank you for listening. This short version broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyrights Eddie Tofpik and ADM Investor Services International Limited. And here comes the final bit.